Kia ora, I'm David Chester with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, inflation seems to be cooling in the world's largest economies. On Tuesday, we noted the retreat of Chinese inflation. Today, the US is signalling a retreat as well. The closely watched US CPI inflation rate slowed for a ninth consecutive period to 5% in March from the same month a year ago, its lowest since May 2021. It was a sharpish drop from the 6% rate in February on the same basis, and also came in below market forecasts of 5.2%. It was energy costs that drove the drop, down 6.4%, but food costs were up 8.5% from year-ago levels. The core rate ran at 5.6%, a little change from February. However, if we look at the annualised rates in the recent shift from February to March, that ran at just over 1% annualised rate, with food showing no change. Energy costs still fell on more recent basis, and it was rent and medical care that kept the February to March rate from falling. However, the minutes from the last Fed FOMC meeting were also out saying inflation is still too high and pressure must be kept on. They are stressing vigilance in the inflation fight, but to be fair, there were some voices for a pause. Meanwhile, American mortgage applications rose at a good rate last week, up more than 5% from the prior week to be 31% lower than year-ago levels. The benchmark 30-year fixed rate was marginally lower at 6.26% plus points. In Canada, they reviewed their benchmark interest rates overnight and, as widely expected, kept them unchanged at 4.5%. In Japan, machinery orders rose 9.8% in February from a year ago in the latest data released there. That was well above the 3% expected and well above the good 4.5% rise the prior month. Japanese producer prices were unchanged in March from February, with a fast cooling year-on-year rise. Indian industrial production rose at a little changed rate in February, up 5.6% from a year ago, and their consumer inflation rate slipped to 5.7% in March from 6.4% in February, and close to the top of their wide inflation target range held by the RBI. The US Treasury 10-year yield starts today at 3.41% and down 2 basis points, and the price of gold is at $2,013 and up $8 from this time yesterday. And oil prices are up another $1.50, just on $83 a barrel in the US, while the international Brent price is up to just over $87 a barrel. And the Kiwi dollar is firmer against the US dollar now at 62.2 US cents and up a quarter cent from this time yesterday. But against the Aussie, we've slipped to 92.8 Australian cents, and against the euro, we've slipped a quarter cent, now at 56.5 euro cents. That means our trade-weighted index is at 69.9 and unchanged from this time yesterday, and still at a one-month low. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.